Welcome back, traders. Welcome back to this platform called Peaceful Traders. You see, so what we do here, we teach about forex and we give peaceful trades, not trades that will blow your mind off. So today I have an amazing topic for you guys. My name is Peaceful Trader. I have an amazing topic for you guys, which is the top 3 pairs for you to trade as a newbie. Top 3 pairs for you to trade as a newbie. For those that have been following me from day one, thank you so much for your support. I really appreciate. For those that are still new here, so I want you guys to click on the subscribe button below, share and comment so that this knowledge will also reach out to people and so that they also benefit from this knowledge as you are benefiting from it right now. So let's dive into the chart. You can see we are already on the chart. The top 3 pairs for you to trade in this year 2026. You can see this year we are already in the new year 2026. Top 3 pair you need to trade this year 2026. First, as a trader, a newbie in that matter, avoid gold. Avoid gold. You don't need to trade gold as a newbie. Never you trade gold as a newbie, because there's a reason. If you check other traders, they'll be telling you that don't trade gold as a newbie. If you know that you don't want to have heart attack, don't ever trade gold, because there's a reason behind it. That peg is so volatile that your $10 cannot hold it, your $20 cannot hold it, even your $50 self cannot hold it. Talk more of $100, you see. So you need to leave that one aside. First, understand those simple ones. Let them be part of you. Understand their structure. Be profitable with them. Then you can go for the volatile ones like gold and silver, US 30, Nasdaq, SP 500. You see. So, but if you don't have the foundation of forex and you're just a newbie, you want to start forex this year and you're dealing with gold, you want to blow overnight, it's not going to work that way. You see. Wise, don't be carried away by the things you see on social media. Those people that are using gold to make profit, living a good lifestyle, they have been into the game for years. You are just coming up and you want to be among them, to feel among, and you want to leverage over leverage your account because of you want to blow overnight. It doesn't done that way. It takes time. As long as you are consistent in this game, you will see yourself making more profit day by day. Once you understand those simple games, those simple pairs, once you understand those simple pairs, you see yourself making profit day by day. You see yourself making profit day by day. See, I want you guys to stay to the end of this video so that I will tell you the top 3 pairs you need to trade as a beginner, as a newbie. Stay to the end of the video. First, number 1 pair is USDJPY, which is US dollars slash Japanese yen. Then the second one is Euro USD, which is European US dollar. You see, European US dollar. The last one, I want you guys to stay to the end. I'm not going to mention the last one yet, so I want you guys to stay to the end of this video. Then when you stay to the end of the video, for sure you are going to get the last one. So let's dive into the chart. You can see we are in USDJPY. We are going to analyze this pair together. Why I choose these 3 pairs is because of the reason why I choose USDJPY and Euro USD, because of they are less volatile. When I mean less volatile, their volume is not that high like that of gold and silver. You can use your $10 to trade and you get enough profit without having heart attack, without you being scared of losing your money in one trade. You see, that's why they are good for newbies or beginners that want to start forex. You see, it's less volatile and the market structure is very understandable. It's not confusing. Once you understand market structure, for those that have been following me up, you are going to understand. You're going to know. I've dropped a video about market structure, how to read market structure. Once you understand how to read market structure, you are going to know that yes, the market structure of USDJPY is very simple, and that of Euro USD also simple as well. You see. So let's dive into USDJPY to analyze the chart together. So you can see we are in 30 minutes time frame. Let's go to the 4 hours time frame to know what is happening first. As a trader, a newbie here, you want to trade. As you want to trade, you open your system. Decide to trade, you open your system. First thing that need to come to your mind is the structure of the market. Before I continue, I want you guys to know how to add. For those newbies that don't know how to add pairs, yeah, if you open your laptop and you click on your trading video and it's showing like this, you just need to click on the watch list. If your trading video is showing like this, you just need to click on this place, which is titled watch list details and the news. You click on it, it will open. Then you are going to see watch list. You see on this plus sign, you click on the plus sign, which is add symbol. Then let me say, for example, you want to add AUD US dollar, which is Australian dollar. You just need to click. You just need to type on your laptop AUD USD, and you see AUD USD is going to appear. Click on the plus sign. Once you click on the plus sign, you can see it's already added. is already added, but there's an error. Maybe there's an error is already added on the chart. You can see that's how to add bets on your chart, on your watch list. For those that are using mobile phone, I'm going to drop a video for that. So let's go to the chart. You can see market has been going bullish. Market has been going bullish. What is your view on this? The mindset you're going to have is, yes, I need to take a buy opportunity. So since market has been going bullish, then I went down to my 1 hour time frame. I'm going to share with you guys the trade I took this week, which was last year. You see, so first, we all know that market has been going bullish on the 4 hour time frame. So 1 hour time frame, I saw this movement because market was going. You can see I've already marked out everything. I've already marked out everything here. You see, so on the 1 hour time frame, I said let me look for opportunity. So market went up. There was a supply zone here from the 3 hours time frame. Supply zone here from the 3 hours time frame. You can see it was mitigated and there was a rejection down to the downside. And I was expecting price to sweep this liquidity level here, tap me in here, then move back up to continue the bullish flow. But something happened. Market was retracing down, and then there was this structure that was forming here. So at first I didn't focus much on the structure, but since I was desperate of looking for a buying setup, then had to put my mind on it. So I was monitoring the movement of this pair. So I waited for this movement to happen. First, I was waiting for it to move down to this level to tap me in, but no, it went up. It went up to give me a market structure shift. You see, the reason of this movement, why it's going up, the reason why it's going up is because of there is a market structure shift here. There's a market structure shift here. You see, there's a market structure shift here, and that market structure shift, because of this market structure shift, was because of this supply zone that is here. This supply zone was the reason of this structure shift. So market will definitely try to travel back to tap into that supply zone, then come down to tap us into our demand zone, then move straight to continue the flow of the bullish movement. So I waited for this confirmation to happen, and it happened. Then I went down to my 30 minutes time frame. You see, 30 minutes time frame. 30 minutes time frame. I took this trade. I got my confirmation, which is my market structure shifts, my inducement. You can see, which is sweep of liquidity. My inducement sweep of liquidity, and this was my sell side liquidity. So I was waiting if this demand zone don't hold and it sweep this sell side liquidity, market is going to come in and tap in here and move straight to the upside. You see, so I waited patiently, but I had to take this risk because as a trader, you don't need to lose all your money in one trade, because there are many setups every single day, every single hour, every single minute, every single second of our life. There are so many setups, you see. So if you lose one trade, don't lose all your money in that one trade, because another trade can make you recover that loss. So you need to have a good risk management as a newbie. Have it in mind, have a good risk management, so that you won't lose all your capital in just one particular trade. You see, so I had to take this risk. I was not sure enough, but I just had to take this risk, and my stop loss was here. You see, below this sell liquidity, and my target was the next nearest high, which is 1:2 risk reward ratio. You see, 1:2 risk reward ratio. And you see, market gave me this nice movement, and I caught the trade. This week, market gave me this nice movement. You see, so what am I expecting next? You can see that the market trade is very, very simple to understand. From the 4 hour time frame, we saw that the market has been bullish. Then we went to the 1 hour time frame to look for an opportunity. You see, the 1 hour time frame, we went to look for an opportunity. Then went to the 30 minutes to execute our trade, and we got 1:2 risk reward ratio. Now, what are you waiting for now? You are waiting for this movement. You know all these things. You see, what are you waiting for now? Now you are waiting for this movement to happen, which is this supply zone that has been formed here, and this market structure shift was caused by this supply zone, and there's a sweep of liquidity. The market has not sweep the liquidity yet. We are waiting patiently for market to sweep the liquidity. So my view on this is these 2 ways. Market might not sweep that liquidity this week. Might come down. Let's go to the 2 hours time frame to see something here. It might come down. Tap us in here because of in the 30 minutes time frame there was there was something here, there was a block here, there was a block. So continuation of the flow, the 20 minutes time frame, there was a block, continuation of the flow, and there was a sweep of liquidity here. Sweep of liquidity here, and here is my break of structure. Here's my break of structure. So market might not sweep this liquidity this week, might come in, tap us in here, was to take this movement. If market come in to tap us in here, we'll take this movement, put it below this side liquidity, take this movement up to this level, which is the nearest high, which is another 1:7 risk reward ratio, 1:7 risk reward ratio, 1:2, sorry, 1:2 risk reward ratio. You see, you take from here up to there, which is 1:2 risk reward ratio. But if market doesn't come down, then it sweep this liquidity. You will be taking this sell side trade, we're taking this sell trade straight to this sell side liquidity, because I know this zone is not going to hold. Nothing will make it hold. The zone will not hold. You see? So that's how to understand the chart. You can see, we just analyze this chart, everything just here. You see? So if here this liquidity is being swept to go and tap us in there, you see. But if it doesn't sweep this week, it will tap us in here and go straight up. So that's my view on USD. But let's move straight to the next pair, which is USD. Now, traders, I've shown you how to analyze USD JPY. Now we are in Euro USD. Euro USD, you can see from the daily time frame, you can see market has been bullish. I've already analyzed everything. Market has been bullish, so I'll just explain everything so that this video will not be very lengthy for you guys. So I've already analyzed everything. So market has been bullish. So what are we expecting? We're looking for a buy opportunity. Market has breached to the upside, Then here is a demand zone, continuation of the demand zone. Then guess what? Market went straight up. Instead of market to come down to tap us, the market went straight up and was doing this movement. You see, market went straight up and was doing this movement. So as an experienced trader, I had to okay, let me analyze this chart and know what's to happen next. So this is my 2 hours view. The continuation of this flow is still valid. This is my inducement. You can see from the daily time frame, the market structure is very, very simple. The volatility is very, very less. So I don't mind putting 3 positions on this trade. I know the stop loss, the losses will be very, very small. Even though I have $50. The losses, if I use 0.03, I know this, the losses will be very small. Maybe I used to position, I just put 0.03, the losses will be very small. You see, that's how to calculate, have a good risk management. So I analyzed this, and you can see I went down to the 15 minutes time frame. Let's go to 45 minutes time frame, because I saw my intro in 45 minutes time frame. You see, so this zone is still valid, but something is happening here because of there is a break of structure here, a sweep of liquidity here, sell side liquidity, a inducement, a buy side liquidity, and market is like doing something marvelous here, which is creating another liquidity, showing that okay, market can still come and tap us in to go straight up. You see, so this zone, market might not come back to this zone again, but if market eventually sweep this zone, the next place we'll be waiting for to take our entry is there. So I'm not going to risk all my capital on this single trade. That's how to analyze and have a good risk management. Once you use wisdom on this market, on this industry, you see yourself going day by day. You see, all these pairs I'm mentioning are pairs that will guide you straight to you, make you well disciplined. You see, so here I'm waiting. Today is holiday, which is 1st of January 2026. So once market open on the 2nd of January, then we'll know what will happen next. If market eventually sweep us here, our next target will be here, and we'll take this buy side liquidity out. Because of what the overall structure said, the market is going bullish on Euro USD. You see. So lastly, I know you guys are waiting patiently for the last pair, which is called GBP USD. and the full name is Great British Pounds US Dollar. Great British Pound US Dollar. One thing I want you guys to know about Great British Pound US Dollar is it's slightly volatile. When I mean slightly volatile, it has a little bit volume. You see, the volatility is just small in it, but not as that of gold and silver and other features pairs. It's just small in it. So, but one thing you need to know about GBP and Euro USD is that these two pairs are they move the same, correlated, they move the same. If Euro USD is buying, GBP USD is buying. If Euro USD is selling, GBP USD is selling. You see, GBP USD is selling. But have it in your mind that they are different pairs and they have different market structure. You need to have that in your mind. They are different pairs and they have different market structure, but they move alike. They are doing like twin. You see, so that's how these two pairs behaves. Let's go to GBP USD to see for ourselves what is happening in GBP USD. I already mark out everything. Let's go to the daily time frame. You see, okay, let's look at time frame to know what is really happening. For the weekly time frame, you can see market have been bearish. For Euro USD, market is bullish. For GBP USD, market is what? Bearish. That's what I said earlier. There are different pairs with different market structure. Regardless of they move the same. There are different pairs with different market structures. So for that, you need to treat them their way, not the same way. Treat them their way. If you are trading Euro USD, treat Euro USD as a different pair from GBP USD. You don't need to say, okay, because of GBP USD is taking a buy, Euro USD will also take a buy. Euro USD might be on a sell structure, a bearish structure, but it's taking a buy at that moment that might fake you out and you lose your money. But why GBP USD might be on a right track, taking that buy setup. You understand? So you need to treat these two pairs differently, not the same. You can see it's bearish. So what are we looking for? Here there's a supply zone up here. Why is the supply zone here? Because of this break of structure happened. You see, and inside this break of structure, you can see there is an inducement here, and that inducement has not been taken yet. You see, this inducement is not taken yet. We are waiting for it to take out. Then, so we are analyzing this chart now. Let's look down to the daily time frame. Now on the daily time frame, what are we seeing on the daily time frame? You can see something is happening here. First, there was a movement from here, which is this resistance level, which is support level, straight up. So we were expecting this place to be swept at the entire crossing, but no. Market, this forex operating is not controlled by anybody. It does its thing its own way. You see, you just need to follow up the market. How it's going. Just be updated 247. As a trader, you need to be with your chart 247 to know what is really happening in the market. Because you can never expect market to just move the way you want it. It does its thing its own way. So you can see market, instead of market to continue the movement, it stopped here and gave us a market structure shift. Why is it giving us a market structure shift? We don't know. You just need to follow up. You see, then gave us a break of structure. You can see, gave us a market structure shift and also gave us a break of structure. Then the up supply zone is for who? We don't still know. We just follow the chart like that. We continue to trade, we continue to see, we wait for that day to finally reach that supply zone. So you can see there was this supply zone here, and inducement because of this supply zone was this market structure shift. This supply zone caused this market structure shift. So market traveled back to tapping this supply zone and went down to give us a break of structure. So this break of structure now that market gave us like this now. This break of structure that market gave us like this now. Because of this break of structure is another supply zone, the continuation of this previous one. So what are we waiting for? We are waiting for this sweep of liquidity to happen. So what are we doing now? We are going to look for a buy opportunity. Don't forget, there's a video I dropped some weeks ago about time frame. I said something that you might have a bearish market structure on a daily time frame. Then you go down to the 1 hour time frame, you'll be seeing a bullish market structure. If the bullish market structure is really making sense, don't be scared of taking that risk. Take the risk, but take the risk with wisdom. take the risk to look for a sell opportunity to take that sell. Don't take the risk and you expect the market will just be buying up. No, take the risk to look for a sell opportunity. So this is what we are doing here. We are taking this buy opportunity to look for a sell opportunity. So we'll go down to the 3 hours time frame. Since you already know that, okay, let's look for where we are going to take a buy that will push straight to our supply zone and continue the supply zone flow. So here on our 3 hours time frame, you can see the market structure is very, very simple and understandable. Market is breaking straight to the upside, to stay that yes, you look for a buy opportunity that will trigger this sell opportunity, then you take the sell. So let's like this go down to 2 hours time frame. You can see there was a sip of liquidity here, a continuation of the flow, a block of straight to the upside. Then what are we waiting for? Market to come and tap us in here and push. So here we are waiting because of this place is our buy side liquidity. Buy side liquidity. Here's our sell side liquidity. Here's sell side liquidity. Our inducement. You see, here's our inducement. So we are waiting for market to do something. If market doesn't take this sell side liquidity, the market will eventually tap us in here. They move straight to take the buy side liquidity and he's going to clear every buy side liquidity to tap us on a sell trade, then move down. I'm going to drop a video about liquidity. I will drop a video about liquidity. If you are interested for me to drop a video about liquidity, just type it on the comment section. So these are the top 3 pairs that you need to trade as a beginner, as a newbie. So I want you guys to subscribe to my YouTube channel, share to people that want this knowledge as well. Comment. I need your support on this channel. Thank you and enjoy your new year.